Hey everybody, this is Caitlin Tillett, Realtor with Watson Realty serving North Central Florida. I'm coming to you parked from the pickup line at the school. So I had a few minutes and I wanted to record a video. I actually did my hair and a little bit of makeup, although I'm running out of mascara, so I need to restock that. So this is a really great time for people to buy a house. Interest rates are low, and at the end of the year, people who have been trying to sell their home and maybe haven't yet might be a little more flexible on price or paying for your closing costs. So before you even hop on Zillow, hop off of Zillow, and look at your bank account, evaluate your finances, make sure you know how much you make per year. Some people do, some people don't, it just depends. And evaluate how much debt you have, credit cards, student loans, if you're paying Rent-A-Center or a furniture set. Evaluate how much your expenses are. And there are mortgage calculators online. It's not always accurate. Just understand how much room you have and what your debt to income ratio is. It depends on what kind of loan you can qualify for, but they typically don't want to see more than like 30 to 40% of a debt to income ratio. Evaluate how much you have in savings dedicated to a home. You're gonna think you need an earnest money deposit, you need a down payment possibly, depending on the loan type. You may have to pay for closing costs. If the seller is not going to pay for that, you're going to have home inspections, and each property may have more or less inspections, depending on if it has a septic and well, or if it needs a further roof inspection. And then the lender is also going to want to see reserves for money set aside for other future mortgage payments. So once you've evaluated your own finances, you've determined how much money you have allocated and saved up for a home, which can be very little, and sometimes it can be a lot, depending on where you are and what you're looking for and what you can afford. Then I would get with a lender and a realtor. Sometimes you have a trusted realtor that can recommend a great lender for you, and sometimes a lender that can recommend a really great realtor. Normally you want some sort of team, in a sense, that have worked together. They constantly work together and they know how each other operates, and they are both very trustworthy and able to communicate a lot with you. So once you've gotten with a mortgage lender and they have run your credit score and they have determined how much you're approved for a loan, what loan type, and all of that specifics that I can't really touch on because I'm not a mortgage lender, get with your realtor, and then you can start the fun part of house shopping. Not every home out there for sale will qualify will be qualified for the loan type that you are qualified for. So, cash, if you don't need a loan, great. Cash can buy any kind of real estate. Conventional can buy nearly any kind of property, and different loan types like FHA, VA, and USDA are a little bit more strict. So the fun part is actually house shopping. So I would get with a realtor, see what they have that they can send you in the MLS, because they're going to find accurate info on properties. They're going to have more access to more info than Zillow does. And then we go look at the properties in person. And then after that, you pick one property. And you're going to make an offer on it. You're going to say how much you're willing to pay for the property, how much you have in earnest money deposit, how long your inspection period is, and when you could close. And so that closing date will look different depending on your loan type and depending on what's going on at that time, as things can change. For example, USDA loans can get backed up in the system that they have closer to the end of the year. So early in the year, sometimes that can take 45 days from contract to close. And as we get into December or the holiday months, sometimes it can take up to 60 days or longer to close a USDA property. So always talk with your realtor and mortgage lender about these timelines. Once you offer, depending on the market and what's going on, the seller may accept or counter. And then once both parties have agreed on all the price and terms and have signed, it is now an executed contract, and you have started the process from contract to closing, and you're just one step closer to getting into your home. After that, you have an earnest money deposit you must pay. You have an inspection period, and then you would go on to have an appraisal of the property to determine the appraised value and the survey. I will be posting more videos going in depth into each of this, and you can always feel free to give me a call at 352-363-8956 or email me if you ever have any questions. After that, you get the clear to close from your mortgage lender, and you have the settlement statement, which shows how much each line item you're being charged for, what the seller's being charged for, and it shows what the seller is netting from the sale of the property. And it also shows how much money you need to bring to closing, if any at all. After closing, or at the day of closing, you have a final walkthrough of the property, make sure everything is in good condition still, and you go to the closing table, which is either at a title company or a real estate attorney's office. You sign a bunch of papers if you are getting a mortgage, because the mortgage requires a bunch of loan documents for the buyer to sign, and then you officially get the keys and you are a homeowner. Congrats.